Welcome back to Ozarks Live. Bruce Porter joins us now for this week's Dollars and Cents. This segment is sponsored by the Resource Center. Thanks for coming in, Bruce.
Good to be here.
There's a lot of people right now saying, I am worried about my money.
Yeah. So, we're getting a lot of concerns, and, I don't blame them. When inflation is skyrocketing, interest rates are rising, the markets are decreasing in value, everybody's concerned about money.
Yeah.
Well, I think to help folks, I think if you identify which time of life you're in, are you still in an accumulation phase or are you in a distribution phase of life? If you're in an accumulation phase, you're still in the phase where you're going to start, you're going to keep working, you're going to keep contributing to your 401k or your IRA or whatever you're doing to save money. You just keep right on going. Things are more expensive, you might have less money to invest, but I encourage people to keep putting money in. There's a lot of opportunity when the markets are depressed because share price is less than it was a month ago. So now your same contribution is buying more shares. So when you're in that accumulation phase, then you can actually build future wealth by buying more shares at a lower cost. Yeah. Now, when you're in a distribution phase of life, then distribution takes on a whole different role. That's when you're relying on your life's earnings. You've worked 30 or 40 years in a job, and now you got that bucket of cash to rely on for sustainable income to supplement your Social Security or anything else you have. So when you look at that phase of life, if that's where you're at today, I don't blame you for being concerned because you have a sequence of return problem. You're taking money that you need to live on out of a value that is maybe decreasing in value. And so now you can see the problem. It's going down, you're taking income, and it gets gradually worse the lower the value gets. If you're drawing $500 a month out and you've got X amount of money, that's fine. But if it's worth half, you're in that same $500 a month, the effect is worse. And then when it tries to recover, the market's going back up someday, then it's harder for it to climb back up because you're still drawing income out of that same bucket of money. So in a distribution phase, that's where we encourage people to take less risk, be more mindful of that sequence of return problem, and that way you can kind of guard against the fear of running out of money. And that's a big fear for a lot of people.
Yeah. Now, if we're in the accumulation phase right now, what are some hints and tips that we can do to combat that for the future?
Well, if you're in the accumulation phase, you want to stay the course. Now, I hope everybody's been watching the show for years and you've developed a plan. So if you develop a plan, and that plan includes your 401k, if you're putting a contribution in, when times are tough, people have a tendency to pull back and not put as much money in. Well, I would encourage you to stick to the plan.
Regardless of performance.
That's right. You just keep putting money in because you're actually, your dollars that you're putting in are more valuable in the future with a lower cost of that investment. So when the investments are down, put more in if you can. But with inflation and things like that, times are tough, and all these different things. A smart distribution strategy later on in life, managing taxes is going to be important, budgeting, all of these things become very important to us, especially when the markets are fluctuating like they are. So,
when you say tax management, can you go a little more deep into that? What do you mean?
When you retire, everybody thinks they're going to be in a lower tax bracket when they retire, and that's kind of the common misconception. Sometimes you may be in the same tax bracket, and there are times when you're in an increased tax bracket. So, I've always said a good day to retire is when you have $1 million in a Roth IRA, because it's all tax-free. But when you have $1 million in a 401k, you got to remember 25 to 30% of that is not even yours.
Yeah.
It's
Yeah,
the government's.
right.
And so when you retire with a big amount of 401k money and you start taking money out to live on,
Yeah.
you might be surprised your tax bracket might become a challenge.
Which is why we need you and all of your
Absolutely.
advice. And remember, if you have a financial question for Bruce, visit his website, resourcecenterinc.com,
Yep.
or give him a call at 417-882-1800.
Thanks, Bruce, for
Thank
being here.
you.
Yep. See you next.